Hello everyone, I am Dr. Eric Morrison. This is 7 Under 3, and I'll be covering trading education, more specifically Forex swing trading, using the TC2000 platform. Hello, this is the Forex Weekend Review on the 26th of February, last day of the month, at 4 p.m. Central Time. I'm going to start off the Aussie dollar, Canadian dollar. I had two trades for Aussie dollar, Canadian dollar. So this was Friday's, this was the candle that formed on Sunday, so I had no trade here. I did take this trade with a Heikin-Ashi gain here before it came back and closed, and I was no longer in this trade at that time. The candle went ahead and had an extreme move to the downside. I took this short and got a nice gain for here, a 1-2 punch out, and another 1-2 punch out for Aussie dollar, Canadian dollar. Aussie dollar, Swiss franc had an initial order here on Sunday with two green candles north of the RL10. Hit my Heikin-Ashi Z3 and no further trade for the rest of the week. Aussie dollar, Japanese yen had an initial trade here for a loss and then a small loss on Aussie dollar, Japanese yen. Took another trade here and had another order here with a pretty big spread here. So what I did was I moved the stop up to break even between both orders. Continued to go up, but did not hit the Heikin-Ashi here, and so it came back and stopped me out for break even. No further trade for the rest of the week. Aussie dollar, New Zealand dollar had initial trade here on Monday, stopped out for a loss here at the RL10. Then I had a beautiful 1-2 punch out at the the RL270. Decided to go ahead and do another order for a nice 1-2-3 punch out. So this was pretty phenomenal gain if you stayed in it for a 1-2-3 punch out, or if you did the 1-2 at the Z3 and then come back in it for the 2 candle rule for a nice 1-2-3 punch out. Aussie dollar, US dollar, nice gain here. We had an initial order here, then Z3 for a nice gain for a 1-2-3 punch out. Kept my stop at the Heikin-Ashi low, and as long as I tried to keep a good 1-to-1 risk ratio there. So good 1-to-1 there for a nice trade. Then was back in it on Wednesday for a loss, and then took this trade for a beautiful gain for a 1-2 punch out. I understand that the RL270 was here, but I went ahead with this strength and momentum candle. I was figuring out that it could have been, you know, a nice break to the downside, but just this is a hard trade to take because we have an extended range candle. So you keep your stop here at the hump of the dragon would probably be good as one indicator away, and then as a potential target you could have the 30 moving day average, which is not a very big moving day average. I just stayed in it and closed out at the end of the day for a nice gain. Canadian dollar, Swiss franc had an initial order here for a loss and did not take this trade for the Heikin-Ashi Z3 was right in this area, and for pretty good reason here. This was the open here. The risk to reward is not that much because we're running alongside that Z3, so we can't just take every 2 candle rule or every candle rule with the Heikin-Ashi body above. Probabilities of going above the Z3 are less than 3%. So these are 2 candle rules that we have to take in terms of probability diversification. No further trade for the rest of the week. Canadian dollar, Japanese yen. Did not take this trade because the Heikin-Ashi was below the RL10. No trade. We did take this trade and had a loss on Canadian dollar, Japanese yen. No further trades for the rest of the week. And it didn't hit our Z3 target. Swiss franc, Japanese yen. Beautiful trade. We had Heikin-Ashi body below the RL10. We're red. Took it. This short. I had to stop right at the height of the Heikin-Ashi. Took the second order and then hit the Z3 excursion here. Nice wide excursion for a nice target trade. Then I took this trade and for a nice 1-2-3 punch out in the other direction. Good trade for Swiss franc, Japanese yen. Euro, Aussie dollar. This was Sunday. Took this trade. Was out here on a 1-2-3 punch out. Then took this trade for a 1-2 punch out. Significant gain on this one. Euro, Canadian dollar. Sunday had a 1-2 to loss here, then took this trade for a loss, and since it was an extended candle here, the Z3 excursion was here, so it was right at the Z3 excursion. Here I went ahead and put the stop here at the RL10, at least one indicator away, for a loss, and then took this trade for a beautiful 1-2 punch out on Friday. Nice reversal for the majority of the currencies on Thursday. Euro Swiss franc, no trade. Did not get caught in this up candle that was up from the previous week. Had initial gains from the previous week. Did not trade this, and no further trade for the rest of the week. Euro British pound was a continuation of the previous week. Took this trade for a short. Was out here. Took this trade for another loss here on Friday. Euro Japanese yen, no trade. All of the Heikin-Ashi were green, but below the RL10, so no further momentum to the upside. All hovering around the RL270. I did take this trade, and then it hit the Z3 excursion here. So I took this trade, hit the Z3 excursion, was out for a nice gain, a nice 1-2-3 punch out. This is a large daily shooting star. If anything goes below this, this signifies a significant reversal in the trend. All right, so this is something we need to keep our eye on for the Japanese pairs. Euro Norwegian Krona. This was Sunday. I did take this trade, came back up, took this trade. I can actually below the RL10, was out here for a nice gain. Took this short with one indicator below at the belly of the dragon. One reason why was the RL10 was up here with a major bend in it, signifying a potential collapsing dragon. However, this downward pressure, I was hoping that would go beyond these lows. It did not. It hit this Z3 here. So you got two Z3s that you need to take into consideration. This one where the red is, and then this one is kind of a range of support. And that's what happened here. So when you look at these Z3 excursions for the Heikin-Ashi and for regular price action, this band of support becomes support. And as you can see, it bounced right off of that support zone. No further trades for the rest of the week. Euro New Zealand dollar. Sunday we had a 1-2 and we were out here for a loss. Took this trade for a nice 1-2 punch out. No further trades for the rest of the week. Now if you look at the Z3 excursion and this is the risk to reward when you're doing this trade. So you had 2 candle rule, but the risk to reward is this much between 3 excursion and that short. It's not much of a gain. So I didn't have a continued. I was out after it hit the Z3. No further trade for the rest of the week. Euro Swedish Krona, we had a nice 1-2-3 punch out. I did not continue to chase this, but it did have a significant push to the upside. Euro US dollar. This was the first candle, second candle, and then this one. So no further trade for the rest of the week. So for the current week, this Heikin-Ashi body was above the RL10. I did take it for a loss here. The Heikin-Ashi body became below the RL10, so you're out after that. Did take this trade, and if you used the RL90 for a trade, it went up, hit it, or if you stayed in it, it was a loss here on the second day. No further trades for the rest of the week. British pound Aussie dollar. It was a Friday. I did take this trade for a loss. Came back, stopped me out. This was initial. I did take this initial trade for a loss at the RL10, and then for this trade for the long, I did take it and was out here at the low of this candle, or the low of the Heikin-Ashi. But it went ahead, bounced up against this RL90, then shot right through all the way up to the Z3, the other direction on Friday. British pound Canadian dollar. One thing that we also have to take into consideration, even though it's hovering around a major moving average like the 200, like it did here, kind of consolidating, banks like to stop hunt here, so that's what they were primarily doing. So they were stop hunting here. You see a lot of candles going in a bunch of different directions right around the 200. This may be something that you may want to avoid. Whenever it gets hovering around a major 200 or major moving average like the RL270 or the 200 moving day average, avoid trading the currency until it starts trending. For the week, it was on the up. British pound Canadian dollar. Took this this trade, did not hit the Heikin-Ashi like I anticipated, and was out at the RL10. Took this trade and was at least one indicator below at the edge of the river. Came back, stopped me out. Alright, British pound. Again, with all of these pairs, make sure you take a look at what is momentum on the weekly side. Kind of tends to show you what direction the currency is going to head. I did take this one trade for a small loss on Friday for a 1-2 punch out. No trade or chase along for the week for the British pound Swiss franc. Again, on Tuesday, significant move to the upside for all the Swiss franc pairs. British pound Japanese yen. Did take this trade, moved on the second order, moved the stop to break even on the first, came back, stopped me out for the one order, no further trade for the rest of the week. British pound, New Zealand dollar, absolutely phenomenal trade here. We took initial trade here, another initial trade for a loss, then I took a 1, 2, 3 punch out. Beautiful trade. Small loss. This one was a really small loss because what you do on a short is you put it at the particular Heikin-Ashi. So it came out one loss, a tiny loss or a scratch, then a 1, 2, 3 punch out. Beautiful trade there. So I took the short here with the stop here at the Heikin-Ashi, and took the 1, 2, 3 punch out. After this one, after this candle formed, moved it down here to half and then punched out on the third day. Did not come down and hit the RL270 or the Z3 excursion. Kind of hovered around the RL90. British pound US dollar. This was already in an upward trend. We didn't chase it. Did take this trade for a 1-2 punch out on the British pound US dollar. New Zealand Canadian dollar. Again, no trade. Was not chasing it from the previous week, and no trade on the short side either. Same thing for New Zealand dollar Swiss franc. This was a continuation of the previous week. This past the Z3, low risk to reward, no further trade for the rest of the week. New Zealand Japanese yen. I did take this trade for a loss, and then I took this trade for a gain. This was the gain that I had on this thing, and no further trade for the rest of the week. I didn't take this trade that was right at the Heikin-Ashi. If you did, I would have put it at least the RL10, your stop, for a nice gain. At least been 1-to-1. So this is what that second trade would look like on the 2-candle rule. Right. So if you take this and you look at where current price is at, and if that risk to reward is you're risking more than the actual reward, don't take the trade on these ones that hug the Z3. Right. So the Heikin-Ashi Z3 is what I use for that zone of resistance between regular price action and the Heikin-Ashi, and the higher price goes in this zone, the more likelihood it is going to reverse, and it did so in this candle. No further trade for the rest of the week. So the only trade that I had was this trade right here for a nice gain. New Zealand US dollar, continuation of the previous week, no trade, and no trade on the short. No setup for the short. No Heikin-Ashi, but we did have a first indicator candle, but no lot size or not lot order in there. If you did take us in terms of an overall bearish engulfing pattern, nice gain on here, but this to me was right up against the RL270. It could have went right back up, so I didn't take it. US Canadian dollar, did take this trade for a 1, 2, 3 punch out. My stop was at the Heikin-Ashi here, and no further trade for the rest of the week. No green Heikin-Ashi for change of momentum, even though it's this bullish engulfing pattern. If you did take it, nice punch out on Friday. US dollar Swiss franc, had no trade either direction until we hit here. Only trade was here for a small loss on US dollar Swiss franc, and did not hit the Z3 excursion here, so did not hit my target. But like I said before, if you do have a very long extended candle like you did here, make sure that you have at least one indicator away with a good risk to reward, right? So this is a good 1-to-2. Did not take red Heikin-Ashi below, and this was Friday. US dollar Japanese yen, absolutely phenomenal trade here. This was the 2-candle rule for Friday. This is a 1-2 punch out. Sunday this formed, but the Heikin-Ashi body was above below the RL10. It was red. I took this short, and instead of this small portion here, I went one indicator away and put the stop at the RL10 for US dollar Japanese yen, just to give it a little bit of, I didn't want to get stopped out for just on a spread, right? So I put it at the RL10, came back, thought I was going to be stopped out, did not, and shot all the way down to the 200 moving day average for nice gains. Now, I did not continue with this because with this gain, I stayed with it right here and closed out my trade here. I did not put in an order on the 200 because banks like to stop, do stop hunting on this particular moving average. It came back even though the Heikin-Ashi body was below the RL10. This was a higher high, so it looked like there may be some momentum there, but there was going to be some testing here at 200, in which it did. It came right back up. Now, if this body, Heikin-Ashi body, is below the RL10, this would have not been a good trade to do. You could have had this, but at the Heikin-Ashi high, again the spread, and then the RL10 right there, if you would have had it at the hump of the dragon, I didn't take this. But if you had it at the hump of the dragon, you would have been out for a small loss, at least one indicator away, because you had the RL10, the edge of the river, and then you had the hump of the dragon. Came back in a fury and a beautiful 1-2-3 punch out for Friday. US dollar, Norwegian Krona, Sunday, initial order here for an out, and then we had another order here right at the RL270 and this previous low. Now, the RL270, the Z3 was in this location, right around this low. But because it closed and I had the RL270 and then I have that previous Z3 excursion, I didn't take this. I didn't take. There was just too many moving averages and support zone strength at this area. And look what happened. Now, if you did take this short and you had your target at the Z3 excursion, would have been a nice 1-2 out. But what happened was it just bounced and went screaming in the other direction. So much so that it still was a red doji below the RL10, and I didn't take it. I didn't take that. But if you did, you would have had your short here and your stop here, and look what it did. It went down and then shot right back up. So be careful with these. This kind of signal shows a significant movement in the other direction. Now this has been in a downtrend for a while, but that was definitely a hard bounce. It did have though a lower low, so we'll see what happens. This is just a consolidation. US dollar, Swedish Krona had a 1-2 and then a loss here at Heikin-Ashi high, and no further trade for the rest of the week. This one here was above and a red candle. This one was a green Heikin-Ashi and a red candle below, and this was a green and a red Heikin-Ashi, so no further trade. So we missed out on this particular trade after this initial loss. US dollar, South African rand. This was Friday and this was Sunday, so I took this initial long here. Now they do have a long range here between the edge of the river, so if you did have a target at the 30 moving day average for a nice 1-to-1, that would have been a good target to have. Or if you stayed in it at the bottom of the Heikin-Ashi, you would have been out for a loss here. Now I did take this 1-2-3 punch out, and I was out at the RL270 for a nice gain. Again, significant candle to the upside. I did take this for a small gain here on this side, but what I want you to look at is a significant bounce in a zone of resistance in this area. And you got two horns of the dragon there, showing a typical reversal. W formation, so the trend has changed. See what happens. South African rand, Japanese yen. It's Thursday and Friday. We had a 1-2-3 in. I stayed in it with a stop at, or a target at the Z3, hit the target, came screaming back up for a hangman here, and took this order and this order, and so I had two orders in, decided to put it at break even here, went up for a little while, and then came back down to break me out for break even, and then took this short for break even on Friday. Well folks, that's all I have for the Forex Week in Review. We're currently conducting a Forex Bootcamp and a Forex Intermediate course. If you're interested, click on the link below. And remember, ruthless risk management. Have a great weekend, everyone. Happy trading, everyone. Well, if you like this video, go ahead and hit the like button below and the subscribe button. And if you want more information on TC2000, I have an affiliate link below. If you open up a TC2000 account, you will receive a $25 discount using that link. Thank you for your time.